Good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, January 3rd, 2022. Quite an interesting day today in the NASDAQ, with the market initially coming off the bell with a slight rally and then a strong decline down to new lows for this particular decline. The market did find a low at 16,292. And I felt that it may have been on its way to 16,250, which, as we know from previous analysis, was a support zone for the minute fourth wave correction. And that was an area that would have been consistent with a 0.382 decline. So I've marked the low today as the completion point for this minute fourth wave. To just recap quickly, we are in the process of putting in an intermediate fifth wave advance. Within that fifth wave advance, it will consist of 5 waves of minor degree. I am starting to count in minute degree levels. So this first minor wave 1 will consist of 5 waves of minute degree, which we have 1, 2, 3, now 4, and hopefully the start of the minute fifth wave to complete this first leg up. Now, as I said within the S&P analysis for today, the verdict is still out as to whether this is actually minute degree or minor degree. A minor degree would suggest we're now within that final move, and we're going to have to just kind of wait and see how this all plays out. So what I want to do is just talk about what we did today. So the rally was strong at the end of the day, and the market did get itself above 16,495. Barely, but it did make it. I think it got up to 98. Actually, no, it broke above 16,500, got up to 508. That is positive for this fourth wave being complete and the fifth wave up being now underway. Now, we need continued evidence that that remains the case. The market begins to break out, but it got stuck today primarily because for the greater part of the day, the rally was not broad-based even within the NASDAQ. We had stocks like Microsoft, which did battle back and did come up towards the close, but did end up down on the day. We had Google down most of the day, Facebook down most of the day. So there were stocks that did not follow through as others did. The chip makers, AMD, Advanced Micro, Applied Materials, AMAT, Amazon, and Tesla and PayPal. Strong performance today, strong market performance today. Tesla back above 1,200. Those contributed quite a bit to the overall rally. But when Microsoft was like selling off and was down $6, close to $7, it offset a lot of the rally happening in the balance of the NASDAQ. So it was a little bit more difficult to trade because you were expecting, wow, look at these stocks that are rallying, and the moves were sudden. So if you weren't already in, many times you missed what was happening within these hours. But nonetheless, it was possible to make money, and it was of great importance today to begin to focus on that mindset. And within that mindset, it's like blocking out all of the noise. And also, it leaves your own personal expectations at the door and allow you to follow the expectations of the market. And what I mean by that is there were several times today where I thought, oh, we're going up, and I would buy the future. And then quickly turned around and started to come back down. And instead of just exiting the position to allow me to catch maybe some balance of the sell side, I allowed my own personal thought of, I think the market should be going up, to take hold. And that then just adds to a losing trade. as the trade continues to go down, I'm now out of focus or out of touch with the market telling me, no, we're not going up, we're going down. It may only be for the next minute or less, but we are going down. So what ends up could have been a $100 or $200 loss ends up being a 500 plus. You do that a couple of times, suddenly you're down 1,000, and you're really going to have to hit your daily limit of where you're going to stop. So mindset is of vital importance, and your own personal opinion about what the market should do, even against my own analysis. You got to leave it out. I still can have that the market will eventually go up and fulfill that move because that's my expectation. But I let the market tell me intraday what are the expectations of the market. Now remember, we're putting into place, the market is always perfectly priced. That's the first one. Got to accept that. The second one is the market is always correct. Now, when I step out of it, those two premises, I suddenly drop. Because now I'm saying the market's not correct because I'm correct, I'm long, and I'm waiting for you to go up. When eventually it's like, no, the market was correct. It's like, no, we're going to go down first. Then they did go up, but still, now you're working to cover losses. And there were times when you felt that the market should, or I felt that the market should continue to go down. So you short it, and it's like, no, the market's telling you it's not. So again, that same concept, it all has to go. We're trading price action. We're trading what the market is telling us versus what I or anybody else we personally feel should be taking place at that moment. So it's like admitting, oh, that's not going to happen, I'm wrong, really helps because you're going to be getting out with maybe $100, $200 loss, but you're able to now jump back in. If the market's saying, nope, we're going up, you can jump back in. You'll make your 200 plus what you expected from the move. Or if you can see that it's, nope, not going up, you catch the next leg down, you make up the 200, possibly so with some additional. So holding on to a thought against what the market is telling you is breaking those first two premises that we need to accept. I'm talking this one out loud, folks, because these are important concepts to get into your mind as you're trading. To go against them is at your own peril. So back to the analysis. What I would then expect for tomorrow is the market to again break above 16,500 and start getting itself up here. Now, eventually, if this is 4, we're looking for that fifth wave. That fifth wave would look to be taken out 16,659, which is the current high for the sequence, right? The sequence of this first minor wave one up. So first resistance, 16,695. That takes out that high. And if it comes up in 5, then I'll put a 1 there and we'll look for a little bit of a correction. Now, if it continues and it starts breaking to new highs, remember this line, that's 16,768. That's the existing all-time high. We eventually need to be breaking that. So again, getting back to the discussions to what degree all of this is, that's going to fit in there. Because here I can mark it a 1, we're looking for a 2, and then we get a 3, and et cetera, et cetera. But on the other hand, if it breaks to a new high, say tomorrow, and we start getting to 6820, 16,945, which are our upper levels, well, yes, it's probably still a fifth, but is it a minute or a minor? If it's a minor fifth wave coming up, then we're talking about we're completing an intermediate fifth wave. That's the larger degree in force at the moment. So while we continue to count an ending rally, we're not sure. I can't specifically say, oh, this will be over in a week. This will be over in a month. I now open that window because of the intermediate degree nature of the advance. An intermediate degree wave, fifth wave or not, can take between 1, 3 to 6 months to unfold. Now, being that it's in a fifth wave position and not necessarily a third, I'm going with the 1 month to 3 months. And as we discussed yesterday, that fits as we're coming into a new year. Now, remember, at the beginning of the year, we had a lot of tax selling to finish the year. That's all going to go. Now we've got fresh money. Now we've got bonus money. Now we've got 401k money. Now we've got, hedge fund money, all coming in to the market. Plus hedge fund managers, portfolio managers, reestablishing positions in what they now need to have to finish out 2022, which of course just began. So here we are, all those factors, put them all into the ball, put them into the bowl, give it a big old stir, stick it in the oven, and let's see what ignites. So tomorrow, at this stage, I cannot say that the market will reverse again and come down. Now, again, we have that support at 92. We have support at 16,250. We have support at 16,211. And then below that, we have a lot more, but I would have to readjust the Fibonacci and go from that level. Now, coming off, the 200 sits at 16,342. Let me open this up a little bit so we can see the balance. Look at how we got flat. We got the 50 and the 20 sitting on top of each other at 16,427. We've got the 4 at 81, and we've got the 8 at 44. So there is support coming off. But take a look at this. A, B, C. That's what I got so far. So if it starts to come down and break below 44, and then again below 27, which is the 50 and the 20, then this market is likely still within this fourth wave, and it should come down then and then break 342, which will likely produce some acceleration, going to break through 92, 292, head down to 250 or 211 to complete the move. Then this gets put down there. Now, breaking below 16,200 may start to change that picture, but I don't feel that right now, but I want to put it out there. So again, while expectations are for the continuation of the advance, we need to be able to read and to know when the market is going to be saying, not going there, and tell us that it's going down and begin to pick up speed simply by breaking the moving averages. So if that occurs, we've got our support and we can trade it. It'll be very tradable. Upside, we have our resistance levels and we have our markers that'll be showing us what actually is in force, and we will be looking for the market to react accordingly. So first off, 541, but that should just be a pause. Then we have 567. Then we have 659, 16,659. Got to get above there. And it needs to do it in this move, if this move is indeed that fifth wave up. And then that's its first level where I think it could complete, and I can put a -1 on it. 16,695. Okay. But if it continues through that and then breaks the existing all-time high, as I said, then we're into a period where it's like, well, maybe these are truly just minor degree moves and not minute. So kicking it up 1 degree, which puts a sooner finishing date on that larger intermediate fifth wave, et cetera, on the way up. But it has to break that high first before it even comes into consideration. Then we're looking at these levels coming up here. 16,944, 16,820. Those come into play all the way up to 17,000. Okay, so I'm not expecting 17,000 tomorrow, but I tell you, stranger things have happened. So just be ready. Play according to the moving averages. Use the Fibonacci. Use the moving averages to your advantage. Look at price action. If the market is moving in a particular direction and you said, well, I don't think so, take a deep breath, step back, get out of the position. More than likely, it's going to cost you more than you thought. So, and that works both ways, by the way. I'm going to end it there. Have a great trading day tomorrow. And our next update will be on Tuesday, January 4th.